Hi everybody, this is Mike, and I'm going to put together the last two modules of the Your Money, Your Goals Toolkit, Module 8 and 9 together as one webinar. So I wanted to just start out by going through the tools in Module 8 titled Money Services, Cards, Accounts and Loans, and subtitled Finding What Works for You. And basically, this module is a collection of tools that a client can use to compare different financial services and products to meet their needs based on whatever their goals are. So the CFPB defines a financial product as anything that a client would use to store money, make payments and purchases, send money to somebody, and pay for things over time, like savings accounts, checking accounts with debit cards, prepaid cards, payroll cards, government benefits and EBT cards, credit cards, money transfers, bill payment services, and loans. So basically, a financial product is essentially anything that a client both uses to save money and or pay their expenses. And they give you some examples of what would constitute a financial product. So department store credit card or charge card, excuse me, automobile dealers and car loans, retail superstores, check cashers and payday lenders, online companies, money transfer bill payment services, financial management tools, wallets or accounts, mortgage companies, commercial tax preparers like H&R Block, consumer finance companies that provide loans, and also the U.S. Postal Service because they deal in money in the forms of money orders and money transfers. So these are all examples of what would constitute a financial product. So when you have a client that's looking to establish a particular service, whether it be a checking account or savings account or a mortgage or auto loan, what they want to do first is to kind of clarify what their needs are, what products or services they need, and then use the tools in this toolkit to compare the different options for lenders and providers in terms of interest rates and fees and charges associated with getting the loans or services that they need to determine what the best options for them are. Now, for example, of weighing an option between two services, the CFPB gives you the example of a payroll card. If a client's working for a company that does payroll via a payroll card, should a client do that versus direct deposit? Well, in a lot of cases, a lot of financial institutions will allow a client to have a free checking or savings account if they do direct deposit. So having a direct deposit would allow a client to have a free checking or savings account if they were to go for that option, whereas a payroll card would possibly cause a client to have fees associated with using that card, whether they go to the ATM to try to get cash out or what have you. There's often fees associated with using that payroll card because it's not associated with whatever bank they're going to draw that money on. So if a client had an option between a payroll card and direct deposit, they probably want to go the direct deposit route just because there's no fees associated with direct deposit, and they could potentially get a free checking and savings account, saving them on monthly banking fees. So that's an example of how a client could possibly compare two different products and determining what works for them in terms of their goals, needs, and so forth. Also, when they're looking into maybe set up a checking or savings account, it's always a good idea for them to make sure that they understand what fees or monthly charges are associated with that account. Mentioned a minute ago that a lot of places will offer free checking or savings if direct deposit is going in, whether it be a payroll check or a SSI check or a Social Security check, whatever. But also, some institutions also charge fees if a client fails to keep a minimum balance within the account. A lot of our people that we're working with, especially if they're on SSI, they're using pretty much every dollar they have to meet their expenses, and they maybe not have the means to be able to afford to keep a minimum balance in their account. So one of the things that a client might need to compare when shopping around for where to set their account up at is, whether or not the institution looking at is going to charge them a monthly fee for failing to have a minimum balance in an account. And it just gives some pretty straightforward tips on how to avoid some of these fees and charges every month that a checking or credit union or bank would possibly charge. And these are pretty straightforward for us, but you have to remember, if you're working with a client, especially if they're on something like SSI, they might not have a whole lot of experience in dealing with money, or so these are some helpful tips for your client to have. So obviously, keeping track of a balance to avoid over the limit fees, making sure that they're not spending more than what they have. The ways to do that is to make a note every time they use their debit card, write a check or pay a bill online, whether it be keeping a ledger of their expenses they have going out, or whether they keep track of that just online. They can have the ability to check their balance at an ATM before they withdraw any cash. So it's always a good idea for them to check their balance before they take any cash out. Some banks or credit unions will offer the option of sending a client an email if their balance gets too low. For example, if they require the client to have a minimum balance in their account and the account goes under that, the bank can send them an email saying, you failed to meet our minimum balance requirements and you have to pay a fee. Or sometimes credit card companies can do that too, where a client can be notified if their credit limit has gotten too high and their available credit limit is too low. They can set up an alert to help them track their spending. Make sure they understand how the bank processes a debit. Sometimes if somebody's using a debit card, it'll come out of the account right away. Other times it might take a day or two, depending on who the merchant is or what service the client has purchased. So, they need to make sure they understand how long it's going to take for those transactions to post to the account, because a lot of the time it might show that they got more money in the account than they do with these pending transactions. So it's important for them to keep track of that. Monitor the account online with text alerts or a mobile app. Again, they have the ability to be alerted when their balance falls below a certain point to help them track their spending and manage their available credit. Another thing that they need to do is watch out for overdraft fees. Obviously, pretty straightforward. Overdrafts occur when a client spends or withdraws more money than they have available in their checking account or credit union. And a lot of the time, they'll be charged a fee for that overdraft. So if a client has the ability to track their spending, maybe using some of the tools that were covered in previous modules, it would allow them to save money on some of these overdraft fees. Some banks could charge between $30 and $35 per overdraft. And if a client has a habit of getting into this overdraft pattern, they could be spending, a couple $100 a month just on overdraft fees alone if they don't track their income and expenses appropriately. Another strategy that a client might be able to use to avoid some of these fees is to use an ATM when they withdraw cash from the institution that they're banking with. So if somebody was set up at BB&T, for example, they would want to go there and take money out, maybe not go to SunTrust because it's a foreign ATM. The client doesn't have a account there, then they're going to have to pay an ATM fee. It's more money they have coming out of their pocket. Another strategy is to open and review all the mail they get. Every month, if they have a paper statement coming to the house, they're going to get a statement from the bank showing them everything that they have going in there and any fees or anything that the client would have to pay for the month. If there's any mistakes on that, they can address it with the bank immediately. And obviously, last tip is to never write a check if you don't have sufficient funds in the account. That probably sounds pretty straightforward and self-explanatory, and you would think that clients would know better than to not do that, but unfortunately, I've had clients in the past that have gotten in trouble for writing out checks that they know they didn't have the funds to cover. And so just because it sounds straightforward doesn't always mean that clients aren't going to fall into that trap. So straightforward, simple tip, but a very practical one. Next section talks about overdraft coverage programs, where somebody can have this overdraft coverage put on the account so that if they do overdraft the account in any given month, the bank will cover those charges without charging them an overdraft fee. But that can get expensive. A lot of these overdraft coverage programs do charge a pretty hefty monthly fee for any credit they extend to the client. And it's something that can easily be avoided if they'll just keep track of their income and their expenditures. They won't need the overdraft protection if they know how to manage their money. So how can you avoid that? Obviously, keep track of your balances. Know when debits are going to be coming out of the account if they don't come out right away. Know when the regular electronic transfers, such as rent payments or utility bills, will be paid. If somebody's paying bill online, they have to keep track of that. Money that they have going out just as if they wrote out a paper check. Another strategy to avoid overdrafts is to link a checking account to a savings account, credit card, or any other line of credit they have. So, like, for example, if somebody was banking with BB&T, they had both a checking and savings account, but they didn't have enough money in their checking account to cover the checks they wrote. BB&T could potentially go into the savings to pull the money out to cover the expenditures and avoid those overdraft fees. And since we do work with people with disabilities, wanted to just take a minute to talk about federal garnishments. And this was something I covered in previous Your Money, Your Goals webinars, but as a reminder, some federal benefits such as Social Security, not Social Security disability, but Social Security retirement, SSI, supplemental security income, VA benefits are protected from garnishment. So if somebody gets behind on a bill and is sued, if all they have coming in to their checking account or savings account is maybe SSI benefits, then the bank has the responsibility when they get notified of a garnishment or a request to freeze a client's account to verify what type of benefits the client has coming into that account and making sure that that doesn't get frozen. The way that it works is the bank protects 2 months worth of benefits. So if a creditor tries to garnish money from an account, the bank must check the account history for any Social Security or VA benefits deposited into the account for the last 2 months. So the money that's deposited, if it's VA or SSI for the last 2 months, is protected from that garnishment, regardless of where the garnishment comes from. So the bank has to set that money aside and not allow it to be frozen so the client has money to meet their expenditures. And here's an example of how it works if a client does receive a garnishment on a past due bill. So let's say a client receives $1,000 in Social Security each month. Your bank will see that $2,000 in Social Security was deposited in the last 2 months. The bank must allow you to access up to $2,000 of that money because it's 2 months worth of benefits. Those funds cannot be frozen or garnished. So if somebody owes a bill and the creditor tries to freeze the account, they could potentially go after any wages that are put in, but the bank would have to set aside at least 2 months of the federal benefits. Here's another example. If they receive $1,000 in Social Security benefits by direct deposit every month, and they have $3,000 in the account, the bank can freeze or garnish $1,000 of the $3,000, and the bank must give you $2,000 to pay your bills as usual. That's 2 months worth of benefits. So some of the benefits that are in there could be garnished as long as the person has at least 2 months worth of the benefits to draw on. So if somebody is on SSI or Social Security retirement, and they find themselves in a situation where the money is frozen, then that could be a situation where they would have to go get a lawyer. And if they cannot afford a lawyer, legal aid often can step in and help them resolve some of these issues with creditors and with the bank freezing the money. The exception to this is that if somebody's on SSDI, it can be garnished to pay debts, such as back taxes, federal loans, and child and spousal support. We talked about that in one of the last webinars. But again, if it's Social Security retirement or SSI or VA benefits, there are protections, and a client should consult their local legal aid agency if they run into any issues with the bank freezing that money incorrectly. There's a link here that a client can click on if they're using the electronic version of this to find the local legal aid agency in their area. And it's just reminding us that automatic protections don't apply to paper checks. And these days, Social Security is not doing a paper check. If they're Social Security or VA benefits, it's usually either direct deposit these days, or people can get their Social Security benefits deposited on that prepaid card that they would use as a debit card. So that's usually not something that you have to worry about if somebody's on Social Security. However, if the creditor is the bank themselves, they might have the ability to touch the money that's in there to pay a past due debt. So, for example, somebody has a checking account set up with a bank, and they also have taken a loan out in that bank. Say they have $100 paid or $100 due on the first of the month for their loan payment through the bank. They don't pay it. The bank can actually go in and take that money out of the account as the creditor. They do have access to that money. But again, same thing applies if there is any benefits that are federal benefits that are excluded for up to 2 months. Again, the client should contact their local legal aid society for help if the account does get frozen, and they have provided the link there that a client can click on to find their local legal aid agency. Not going to go into prepaid cards. That's pretty self-explanatory, but it talks about different types, whether it be a payroll card that wages go on to, a government benefit card like a EBT card if somebody's on SNAP benefits, or old term is food stamps, or if they're getting SSI or Social Security on a government card. Those are examples of prepaid cards that people can use like debit cards. Next section talks about some of the fees that might be associated with the cards, though. So if somebody has the ability to do direct deposit over a prepaid card, that's always better because they can alleviate some of the fees associated with using a prepaid card. Not going to go into all this info about prepaid cards. I want to focus more on the tools. So tool number 1 says, know your options, money, services, cards, accounts, and loans. So this is kind of a way for a client to like narrow down what their goals are and what services they need to obtain to achieve their goals. And they can rank their goals in terms of importance using this this tracking sheet. So it gives you some examples of what a client might have a goal of. I want a safe place to secure and keep my money. Is that a main goal? Do they want to be able to make large purchases without having to carry a lot of cash or go into debt? I want to bank and be able to pay bills online. I want to accumulate savings. Maybe their goal isn't related to necessarily saving money, but maybe they want to purchase something. Maybe they have a goal to purchase a car or a home or be able to get a loan. Or maybe they need to work on their credit, as we talked about in previous modules, and their goal is to build credit. This is just a tool that a client can use to easily kind of prioritize what their goals are. And on the next page, it just gives us some examples of what a client's goal might be and some of the options that they have to achieve that goal. So I'm not going to go through all of them, but we can just take a look at a couple of them. So for example, if somebody says that their main goal is that they want a safe place to keep their money, what are the options? Obviously, they can go to a bank or credit union or a check cashing store. I want to be able to make large purchases without having to carry cash or go into debt. Again, options are bank or credit union or check cashing store online. Or they have a goal of being able to pay and manage bills. They have a couple options. If they don't want to do the bank or credit union, they can still go to the postal service and do a money order. I'm sure that a lot of people are moving away from money orders these days because you can do everything almost online, but that is still an option for people that don't want to do checking or savings. They can get money orders to pay their bills and help them manage their expenses. I want to pay bills online. There's some strategies here, like internet-based bill paying services or like online bill paying. Bank or credit union accounts can be managed online, obviously. I want to have my check direct deposited. Is it going to go to a bank or credit union? Is it going to come directly from the employer on a prepaid payroll card? Here's one. Client wants to buy a car. Say that's their main goal. So they have a couple different options on how to get a loan. Obviously, depending on their credit. We talked about that in previous modules too. But they can go through their bank or credit union or through the automotive dealer to get dealer financing. One of the things that a client should obviously think about is the interest rate that's going to be charged. A lot of the time, if a client has at least spare credit and they have a history with a bank or credit union, they might be able to get a lower interest rate on a car loan than they would at like an automotive dealer. So, that's something that a client should investigate before making any decisions. I want to buy a home. I want to be able to get a loan as quickly as possible. So what are some of the options for getting a loan? From a credit card, a pawn shop, a finance company, payday loan vendor. Not going to go into that very much because we talked about the downsides of using some of these services in previous webinars. The payday loan vendors can charge an exorbitant amount of fees. And if a client can't pay a payday loan back within a 14-day period, they're going to owe even more on the loan than they would originally. Options for building a credit history through a bank or credit union, like if they get a loan through the bank or credit union, other lenders and credit card companies. Obviously, if a client can establish a good payment history with a credit card company or on a loan, that gives them the option to build good credit. Options to send money, bank or credit union transfers, wire transfers online. So that was just a couple different strategies maybe that somebody could use to help them achieve some of their goals that they set in Tool 1. Tool 2 is a tool that a client can use to compare different vendors for the same service. So for example, let's say somebody wanted to set up a bank account. They can compare different institutions here on this form in terms of what might be the better option. For example, does bank number 1 charge a monthly maintenance fee for an account? Or is it free checking? Or, are there ATM fees associated every time you take money out of an ATM? Or using the example of the car again, they can compare the difference between maybe doing a loan through their bank or credit union as opposed to doing a dealer loan. But here's some options that a client would consider in determining which vendors to go with for a particular service. Do they feel welcome when they went into the bank? Was the person friendly? Is it close to where they work or live? Would they be able to get there in a hurry if they needed to? Is information available in my own language? A lot of the times we'll run into clients where English isn't their second language, and the institution should be able to maybe speak Spanish or American Sign Language or whatever the case may be. Does the institution allow things for like online bill pay? Do they have a mobile app for convenience, easy access to track income and expenses? Most places I would imagine now do. But if there's a question about a bill pay, is there anybody that I can talk to, a live person? A lot of the places now give you automated services, and customer service is kind of fallen by the wayside. Transfer money. If a client wants to transfer money to a person that doesn't bank with their institution, how much is that going to cost for things like money transfers? When looking at things like, are there monthly fees for a checking or savings account? What ways are there to avoid the monthly fees? Is there overdraft protection if I need it? Is there a fee for making a deposit? Most banks don't charge fees, I don't think, for deposits, but some may. What are the overdraft fees? And, what am I going to be charged if I overdraft? These are all things that a client should consider and ask when they're looking to set up like a new checking or savings account, and they can kind of compare these things with different lenders and go with the best option that meets their needs, right? And it just goes on to talk about, if I need a loan, what are the fees are associated with that? Safety and security about how long it takes to transfer money. Is the institution protected under the FDIC if something were to happen to it? So just getting clients to think about questions they should be asking when they're setting up new accounts, and comparing the different institutions that are available to them to meet their needs. Tool 3 is on money services and banking basics. And these are steps that a client should take once the account is set up, and gives them some ideas of what types of questions they should be asking once they start banking. So in terms of checking account, deposit money and withdraw money from this account by writing checks or using a debit card, suitable for frequent transaction. Many checking accounts include access to mobile and online bill pay. Keep track of your account activity to ensure sufficient balances to cover overdraft fees and whatever else. All right, so if a client is not doing that, they could actually put down here what the next steps are to help them do that. Like, for an example, if they're not doing online bill pay yet, but they're interested, one of the next steps could be getting somebody to help them, or maybe them themselves setting up an online account so they can access their money electronically. That could be an example of a next step. Check cashing. Turn paychecks, government checks to personal checks into cash, often for a fee. Get immediate non-recourse access to funds minus a fee. Now, a lot of the time, if a client cashes or deposits a check at the institution they're actually banking with, a lot of those check cashing fees are waived, at least at the bank I go to. But it's something to think about. Has the client learned how to use their debit card associated with the checking account they set up? So obviously you use this for purchases at the grocery store, gas station, restaurant, wherever you go. And you can use this to make deposits and withdrawals from your ATM if you need cash on hand. So have they learned how to use the debit card? If not, what are some of the ways they can improve? Like, a next step could be, if they've overdrafted in the past, setting a goal to make sure that they keep track of their transactions better. Maybe making sure that they write everything down that they spend to help them better manage their funds. Prepaid card and money transfers, not going to go into that, but I think you get the idea. It's just different options that a person has for bill pay, and steps they can take to make that a little bit easier. Like bill payment services, money orders, savings accounts, certificates of deposit. There's a section here on credit cards and lines of credit and car loans. Have they appropriately managed their credit to debt ratio? Have their bills been paid on time? Are they using more credit than they have available? That sort of thing. These are some of the things they can kind of track on this tool to kind of help them manage their credit to debt ratio better. And maybe they can use some of the tools that we talked about in the income and expense tracker in a previous module to help them do that as well. But like, if somebody's looking for a car loan, they don't quite know where to go, they can use tool number 1 as well as this tool to kind of compare the different vendors that they can go to. Would it be better for them to go to their bank or credit union for a loan, or to the auto dealership? A lot of the time that's going to depend on the client's credit. It might be easier for them to get a higher interest loan from a car dealer than it would be for a bank if they have a poor credit score. These are just things to think about. Section on different services, payday loans, car title loans, things that we probably would never recommend to a client, but sometimes if they're in a fix, they do use those things, even though it costs more money in the long run. And things like modern conveniences, online banking and mobile banking, online bill pay. Have clients set up the ability to go paperless with their bills and pay everything online if it's an option. If not, they could use this tool to kind of keep track of the steps they need to set that up. And then the last one is on alerts. Talked a little bit a couple minutes ago about how a client could set up an alert on an account, like for example, on a credit card where their balance is higher than their available credit. The credit card can notify them of that, or when a payment is due, to help them keep track of their due dates and their expenses they have going out on that date. That would also be something that maybe they could use the bill pay calendar for, that we talked about in a previous module, to keep track of their expenses they have going out. But here is just a way for them to keep track of how to get those account alerts set up if they don't already have it. Tool 4 is opening an account checklist. So this is the steps that a client should take, make sure they have everything in order when they actually go to a bank or credit union to set up an account. So it just says, if you decide that opening a checking or savings account is right for you, opening an account at a bank or credit union is simple. You may want to get recommendations from a friend or family member or a bank or credit union to find out about the services it offers, the fees it charges, and interest it pays on savings accounts. These days, a lot of those interest rates are really, really low. But also a client needs to know how much money they need to actually start an account. A lot of the institutions these days do have like a minimum deposit required to open an account. So the client has to be sure that they're prepared for that when they go to open an account. Make sure they got enough money in it. And it says, be sure to find out how much you must keep in the account at all times to avoid fees. Again, not all banks charge a fee if somebody goes below a certain balance, but some may. Just goes through some of the documentation that might be asked of a client when they set up an account, like a ID, like a passport, driver's license, social security card, or birth certificate, bill with the name or address on it. This talks about accounts that might pay entrance, like a savings account. What are some of the barriers to opening an account that a client might face? So they might not have the proper ID. They may have a poor credit rating with some of the credit bureaus. They may have a poor banking history, a history with overdraft fees every month at a prior institution. These are some of the things that might be a barrier to them to open an account, as well as if there is a minimum amount required for a client to make a deposit, they don't have that information, or they don't have that much. Say they need $100, they don't have it. Obviously that's a barrier right there. Setting up an account. But it does talk about how banks look at your banking history through reporting agencies similar to credit bureaus. It says these agencies collect information from merchants, banks, and credit unions about how consumers manage savings and checking accounts. Banks and credit unions use reports developed by these agencies to decide if someone can open an account. You may have a negative rating if you or somebody had a joint account and has struggled with a checking or savings account in the past and had bounced checks or been suspected of fraud or had an account closed involuntarily. Clients might not be aware that that information would still be out there if they have a history of bouncing a check or having their account closed or overdrawing every month. Might not be aware that information is accessible by the new institution they're looking at setting up an account with, but that information is out there, and it could be a barrier to them getting a new account. But if that's a concern, if clients do want to check the information on these reports in terms of what's out there about their banking history, or if they're worried that there is going to be a barrier about setting up a new account, similar to accessing a credit report through the credit bureaus, client can write to some of these companies that do keep a record of these banking histories and request a copy of any information or reports that they have on them, just to make sure that there's nothing negative on there that could potentially hinder their ability to get a new account. And if there's any information on there, any inaccuracies on there, they can rate the company. Like an example would be if it says that a client had their account involuntarily closed by the bank, but the client closed it of their own accord and the bank had nothing to do with it. That could be an example of something that the client might want to dispute. And they can write to the company by certified mail, just explaining the inaccuracy on the report and asking them to fix it. So this tool is just kind of a checklist of what a client would need when they go to open an account. They can check got it or need it, like ID, social security number, the amount of money needed to open the account. Do they understand the information about the monthly service fees, if any transaction fees or ATM costs? Do they understand about overdraft protection? Do they know what they need to know about the bank's ability to notify them about low balance alert notifications, that kind of stuff? So this tool is just kind of a way for a client to prepare the information that an institution might need to ask for when they go ahead to open an account. Tool 5 is on money transfers and remittance, what you need to know. A remittance transfer is an electronic transfer of money from a consumer in the United States to a person or a business in a foreign country. Not really going to go through this in detail, because odds are that we're not going to have a client that's going to be sending money overseas or something. But it does talk a little bit about the exchange rates and some of the fees that might be attached to sending a transfer that nature outside the United States. There could be additional fees and taxes that apply after sending money to a foreign country. So it just talks about what a client should find out about in terms of fees and service charges that might result from that. So that is the module 8. And the last module is module 9. And as I said at the start of this, I'm just going to do them both together because module 9 is rather short. And this would conclude the Your Money, Your Goals series. This one is on protecting your money. And it talks about how to submit a complaint to the Consumer Financial Protection Bureau if a client feels that they have been taken advantage of, if their money has been stolen, excuse me, things of that regard. Talks about how the Consumer Financial Protection Bureau has already handled more than 1 million consumer complaints about things like credit card companies, mortgages, banks, accounts and services, student loans, payday loans, vehicle loans or leases, debt collection, prepaid cards or other financial services. The CFPB's job partly is to investigate unfair business practices by some of these establishments. If a client goes ahead and files a complaint because they feel like they've been either taken advantage of or their money was mishandled or what have you, the CFPB can look into those kind of complaints. And it talks about how to actually submit a complaint to the CFPB. So if a client has a complaint against one of these agencies, whether it be against a bank or a credit card company or a student loan provider, whatever, they can go to this website, consumerfinance.gov/complaint, and from there, it'll walk them through the process of how to actually file that complaint. It'll ask them to describe the problem in detail in terms of what happened, why they feel like their money has been mismanaged, or why they feel like the vendor has engaged in underhanded in business practice or whatever, how they think the problem should be resolved, their contact information so the CFPB can get in touch with them, and then detailed information about the product and company that they're filing a complaint against. And then it says you will be asked to scan and upload any documentation that you have to support your complaint. So, for example, one of the things they might look into is, let's say somebody's got a credit card. They have proof that they paid $500 on that card, but the credit card company says they never got the payment and they're charging them late fees and things like that because they didn't pay the bill, but the client has proof that they did. That could be an example of a complaint that the CFPB looks into. And if a client was to file a complaint on that, one of the things that they would have to provide for the CFPB to look into that is any documentation that the client has as proof of payment that they did pay the bill and so forth. And then it's submitted online. If a person doesn't have online access, they can file a complaint by calling the CFPB by phone, 855-411-2372. And it talks a little bit about some of the strategies that a client should take when they're looking at, if they feel like a company has engaged in an unfair business practice. Don't be intimidated. You are the customer. If there's something wrong, if the client feels like there's something wrong, if they get a bill and a payment hasn't been applied, they need to call that vendor up before they contact the CFPB and say, hey, I paid this, I got documentation of it, are you going to take care of it? Don't just let it stand. If a client gets a bill or something else they don't agree with, if they feel like it's unfair, they need to say something, or else they might miss out on their time to appeal a decision. before they sign anything or give away any personal information about themselves. If they're working with a financial advisor, what are your qualifications? How do I get paid? What's in it for me? This next section I thought was very interesting because we've all seen these emails. I have an amazing offer for you. They even pop up on Facebook a lot where a scammer will say something like, you can have an amazing opportunity to work at home for $100 an hour. And if it appears to be too good to be true, odds are that it probably is. And unfortunately, in the past, don't know about you guys, but I have had some clients who have either fallen for these kind of scams or almost have. Luckily, I was able to intercede once. The client came to me with the paperwork they received in the mail. It was like a chain letter, send X amount of dollars, to get started. It was like a work from home deal. They were going to send them some products to sell. And I looked it up with the Better Business Bureau, this name of this company that was sending them this letter, and they had, the lowest rating possible because they had a ton of complaints against them. So in that case, I was able to prevent it. But sometimes, a client will get an email or a letter that they will respond to about working from home, or, we've all got that one where, I'm a prince from wherever, and, I need an account in the United States. Send me your account information. I'll wire you the money, and then you can keep a percentage. That's a common scam that's out there, and an unsolicited email. These are common scams that people often fall for, and things that the CFPB may be able to help with. But they give a client some tips here on questions to ask and things to look out for in terms of red flags if the company or the offer is not legit. It says con artists and scammers use creative and innovative schemes and appeals to get part of the money. Follow these principles to detect con artists and scammers. Beware of the promises to make fast profits and investment to claim to offer high returns at little or no risk. So again, probably sounds too good to be true. It is. Do not invest anything unless you understand the deal. Consider running the opportunity by others you trust to make sure that they share your understanding. Example of that, like what I just told you about the client that came to me with that letter he got. He almost sent them the money, but he brought the letter to me first, and I was able to check the company out with the Better Business Bureau, and he was able to avoid that scam. Check the paperwork that you're asked to sign, if any. If the promises made to you are not in the paperwork, that is a danger sign. If it's on the up and up, if it's a legitimate deal, anything like that the client talks to the person about should be in the contract or whatever they sign. If there are details missing, they shouldn't sign it. Don't assume a company is legitimate based on the appearance of a website. It's very easy to put a website up these days. Almost anybody could do it with services like Wix. You don't even really need a background in it to be able to establish a website. So just because a company has a website doesn't mean they're legit. Beware of requests for money from people that you do not know. Research the parties involved and the nature of the job. If you do not know how to do this, ask someone that can help you, or don't deal with that person. Contact the state or local consumer or regulatory agencies to see if there's a complaint against the company. So again, Better Business Bureau. If a client has the ability to investigate with the Better Business Bureau, they probably should, to see if there's any former complaints against this company that they're asked to send money to. Do not open spam, delete it unread, and never respond to it. Not just maybe getting clients to send money, but sometimes obviously viruses come through in spam emails, and sometimes they'll even come from people that it looks like That's a common tactic that spammers use to try to get people to open email. Do not open email attachments from people you don't know or attachments that you did not expect to receive. And obviously, people have the ability to say no. If they get a call or get a letter stating that they need to send money, it's okay to say I'm not interested and hang up the phone or throw the letter away. You know, if people are on the phone pressuring the client to send money or trying to get them to invest in a faux deal, you know, the client can hang up. They don't have to feel like they're being coerced or bullied into sending any money. They can say, take me off your call list, and hang up. Some tips on taking care of your personal identification. A lot of people do things online these days, and it just gives you some tips on how to safeguard your personal information when doing anything online. It says, just as you have to protect your money, you have to protect your personal information. Never give out your information, such as account numbers, passwords, or answers to security questions over the phone or through email. Banks, credit unions, and other institutions will never call you asking you to verify personal information. I just saw a story on the news not too long ago where there's an IRS scam going around where people will get cold calls saying, you know, this is the IRS. You owe us X amount of dollars and you need to pay up immediately or you'll be arrested, that sort of thing. And they were targeting senior citizens mostly. And they were asking for personal information over the phone, just as what this is talking about here, like social security numbers and that sort of stuff. If it's a legitimate call, clients should understand that they won't ask for that information. They should already have it on record. Only provide information initiated in the call to a number you know is from the company, or if you directly typed a website address and you see the signals that a site is secure. A secure website has HTTPS, a lock symbol next to the address, and security authentications and certificates. So that's how a client could know that a site is secure. Look for that little lock after the web address, and look for the HTTPS before the address. If it's not a secure site, it's a lot easier for a scammer to steal information. It's important for clients to safeguard the information they have coming in. Tool 1 is, it just kind of echoes what's up above about submitting a complaint to the CFPB. They can either do it online at the link provided, by phone, or by mail. And it talks a little bit about what will happen once a client files a complaint with the CFPB. So once the claimant submits the complaint, they'll receive email updates and can log the status of the complaint online. The CFPB will forward your complaint and any documents you provide to the company and work directly with the company that the client has filed the complaint against to try to get a response. It says if we find that another government agency would be better to assist, you will forward your complaint to them and let you know. Like for an example, maybe the Attorney General, if it's a big scam, or if there's multiple complaints against one company, maybe that would be something for the Attorney General to handle and not the CFPB. So they will route your complaint on. If there's another agency that can handle it better or more expediently. So the process then is, after your complaint is sent to the company has 15 days to provide a response to you and to the CFPB. In some cases, companies have 60 days to provide a final response. So once the CFPB gets in touch with the company, they have 15 days from that date to answer the complaint. And then the complaint is published. We publish the information about your complaint, such as the subject and date of the complaint, on our consumer complaint database, which I would assume that's kind of similar to a Better Business Bureau database where people can go there and see the complaints that have been lodged against a particular company. And so with your consent, we also publish your description of what happened after taking steps to remove personal information. So even though there's information on the claim and what happened online, personal information is not used. We will let you know when the company responds. You can review that response and give us feedback. Complaints help with our work to supervise companies, enforce federal consumer financial laws, and write better rules and regulations. We also report to Congress about the complaints we receive and some past consumer complaint data on our website. So there's a lot of different ways that information can be used for that complaint for the needs of other people that might be having similar problems. Tool 2 has to do with protecting your identity. And just like, talked a lot in this toolkit about the importance of protecting money and making sure bills are paid on time and things like that. But one of the biggest things, obviously, that needs protecting is protecting your identity. So I don't know if you've ever had clients who have ever been the victim of identity theft, but it is possible if somebody gets a hold of credit card and bank account numbers or a driver's license number, date of birth, or your social security number, your passwords. If it's an online account, this information could potentially allow them to access your current accounts and set up new accounts in your name. And it could potentially allow a client to be stuck with whatever bill the identity thief has run up in their name. So this tool is a little checklist that a client can use to make sure they've taken the necessary steps to make sure their identity is protected. So remove your name from all 3 credit bureaus, Experian, Equifax, TransUnion, mailing lists. That would allow you to not receive as many pre-screened offers. And it would make sure that your name and your address doesn't fall into the wrong hands. Continue to monitor your credit report at all 3 bureaus at least once a year. We talked about in Module 7 how to access and understand credit reports and scores. And that's something that's also recommended here. It gives the client another link to annualcreditreport.com. They can go on there and check the report once a year for free. It's the only one that I know of that truly is free of charge. Limit access to your information. Don't carry your social security card in your wallet or your purse. Remove your name from mass marketing mail lists. Remove yourself permanently from telemarketers list by placing yourself on the do not call list. Don't give out personal information to someone who calls and asks for it, even if they say they are from a financial institution. Again, going back to that IRS example where they were calling senior citizens and saying, this is the IRS, give us your information give us your social security number so we can put you on a payment plan. They're never going to ask for that information because they already have it. Use a shredder, scissors, or your hands to tear up all paper. with identifying information on it. People could even go so far as to root through the trash for personal identifying information. So taking that precaution could protect one's identity. Don't give out your social security number unless it's absolutely necessary. Obviously, if somebody's calling the Social Security Administration for an issue, that would be something that they would ask for. So there are times where it would be appropriate to ask for a Social Security number, but not always. Clients should make sure that they only give that out when absolutely necessary. If they're doing things like online banking or online bill pay, safeguard your passwords, and make sure that passwords include upper and lowercase letters and characters, numbers. And, the more difficult a client makes a password when they set up an account, the harder it's going to be for somebody to hack later. Don't give out financial or personal information over the internet. And again, look for the secure website icon when you do put personal information over. Do not reply for emails asking for personal information, even if they have a bank account or PayPal logo. Financial institutions will never ask for personal information via email. So even if it looks legit, a client should be leery if they're being asked to submit money over PayPal. That's obviously more than likely a scam. This is according to the Federal Trade Commission of the FTC. Identity protection means treating your personal information like cash or valuable commodities. So obviously somebody's not going to just walk down the street handing out cash to anybody who asks for it. The same should be said for their personal information. Don't leave it laying around, and be thoughtful about who's asking for it and why, what they're going to do with it once they have it. And this is a handy tool for people who believe they might have been a victim of identity theft. These are some things that the CFPB recommends they look out for. So if there are mistakes in your bank, credit card statement, or other account statements, there are mistakes on the explanation of your medical benefits. So maybe they're getting a explanation of benefits from a healthcare provider that they never went to. It could be an indicator that their health insurance has been compromised. Regular bills and account statements don't arrive on time. You get bills or collection notices for products or services you never received. You receive calls from debt collectors that don't belong to you. You get a notice from the IRS that someone has used your social security number. You receive mail, email, or calls about jobs in your minor child's name. You receive unwarranted collection notices on your credit report. When businesses turn down your checks and you have been turned down for a loan or job. Common red flags. This next section is some information on what to do if a client feels like or verifies that their identity has been stolen using any of the methods above. So first thing you should do is place a fraud alert on your credit file, and this would allow a client to protect themselves by stopping the identity thief from opening up any new accounts in the client's name. Basically, they can contact the 3 credit report bureaus and verify with them that the identity has been stolen and ask them to put a fraud alert on the accounts, order the credit reports, make sure that everything is on there is legit in terms of the accounts that are open and the balances owed. They can also create an identity theft report. Identity theft reports can help get fraudulent information removed from the credit reports. So, if there's an account that's on an Experian a credit report, for example, that has been verified as fraudulent, that the client can work with the FTC to get that removed off of a credit report and with the credit bureau. And sometimes they can access that by going to the local police department and asking for assistance in getting that set up to get fraudulent information off of a credit report. It says consider a security freeze. You can also place a freeze on your report. A security freeze means that potential new creditors cannot access your report. Only a limited number of entities see your file with a freeze in place. So if a person did attempt to set up an account, most of the time it always requires the creditor to do an inquiry on the credit report before the account is set up. And if the creditor cannot do the inquiry, then they're not going to extend the credit. So it's a way to make sure that no new accounts are open fraudulently. Tool 3 is the red flags checklist. These are some common tactics that a scam artist may use to try to force or coerce a client into spending money or sending money. Like a pressured sales tactic, you're pressured to purchase things or take out loans you don't want or can't afford. Lack of uniformity, different staff or salespeople are telling you different things. There's no consistency in the information being provided regarding the item or service they want you to provide. They won't put the information in writing. If it's a legit company or a legit opportunity, they do have the responsibility of giving you the information in writing, especially upon request. If they're reluctant to do that, that could be a red flag that it's not legit. There's unexplained fees. No one can explain what certain fees are or why they are so high. No clear cancellation or return policy. Don't assume that there's no clear cancellation or return policy. Don't assume that you are able to return a product or cancel a purchase. Everything that's ordered over the phone, internet, or mail should have a return policy. If it doesn't have a clear return policy, it's an indicator that the product might be a scam. Inconsistent information on interest rates. A legitimate salesperson should be able to give consistent information about how much a product or service would cost in interest. They're coerced into pushing a client to make a purchase. Another common one is an incomplete paperwork. If a company pushing a particular product or service is asking the client to sign a contract, they got to make sure that it's complete and that they understand everything that's in it. If there are things missing that they talked about but they're not in writing, that's an indicator that it's not a legit contract. Additional insurance and other add-on products. Some lenders insist or apply that borrowers must buy unnecessary items like additional insurance, unneeded warranty, monitoring services. They get incorporated into the loan amount, and the borrower pays higher interest on that over the time of the loan. So they have an existing loan, but they're pressured into extending a warranty on their product or service that leads to higher payments because of higher interest. A legit company shouldn't force or coerce a client into doing that kind of stuff. Tool 4 is learning more about consumer protection. And this is just where a client can go to get some more background information on the Consumer Financial Protection Bureau, consumerfinance.gov. it talks a little bit about, in more detail, about who they are, what they do. And I'm not going to go through these, but the next couple pages are just a short summary of the different consumer protection laws that are out there, how they work, and how they can protect your clients' rights. You can go through these on your own time. And at the end, there's just some resources. Resources for filing a complaint against a company that's engaging in unfair business practices, resources for helping a person set goals, planning for large purchases. Again, it just, the last couple pages lists every module in this toolkit and some resources that a client might be able to utilize to help them set goals, like getting an auto loan, taking control of your auto loan step-by-step guide, paying bills and other expenses resources, information on how to enroll in health insurance, healthcare.gov, getting through the month was another module we talked about earlier on. Links here for career one-stops that help people find an employment. And maybe while a client is in order of selection with DARS and they're looking for a job, maybe one of the resources they could use is a one-stop center for help with resume and interviewing skills and job leads. There's some information here about how to apply for benefits, disability benefits, unemployment benefits, dealing with debt, some tools on the CFPB has developed on how to cope with debt, some strategies on how to make it more manageable. Some information on resources to help pay student loans, Medicare premiums, and health insurance premiums. Provides some valuable resources for debt and credit counseling for people that are behind on bills and might need some help in developing some strategies to help them get caught up. Some information on lawyers that might be able to represent clients that need help if they get sued by a debt collector or creditor. And then some resources on helping a client understand their credit reports and scores. And so basically there are resources, additional resources at the end of the toolkit that would allow a client to get more information on some of the services that are out there to help them address every module in this toolkit. And so that is it for the Your Money, Your Goals Toolkit trainings. It took several months to get through all the modules, but I hope that you all found the information helpful, and I hope that it's clear in terms of how to apply the information to the work that you're doing with your clients. If you have any questions on this module or any other modules, you can feel free to email me, Michael, michael.klinger, klinger, @dars.virginia.gov, or call me. I have a new business work phone number. That number is 804-245-5593. I would be glad to go through any of the tools with you in more detail if you would like, or if you have any other questions. Thank you.